Hey guys, welcome back. Wow, what a week. The market went down and then back up and then back down again, and that was just one day. So it was quite a week, and if you want to see what the week did to my portfolio, stay tuned. Welcome back, guys. This is Kevin Burgess with yet another video. This one is going to be my weekly update on my portfolio. As you know, it was a pretty rocky week this week on the market, or in the market, and I wanted to share with you what that impact was for me on my portfolio. I'm sure you saw something very similar, and we'd like to talk about what does that mean and how should we put that in perspective as dividend investors. Because as dividend investors, we are after personal freedom. And that personal freedom comes when we can have passive income that is covering our expenses so that we can actually do whatever it is we want to do with our lives. And so it's important, and I'm glad you're here. Let's get started reviewing the portfolio for this week. This is the dividend portfolio update for January 21st, the week ending January 21st. Just a reminder, I split my dividend portfolio into two different portfolios. One seeks high dividend growth, and the other one seeks high dividend yield. The dividends from the dividend yield portfolio are the dividends that I will use to pay living expenses that are above and beyond what my other passive income investments are. So that's the most immediate portfolio, and therefore it is the one that has the higher yield and the lower growth, because I'm looking for yield from that portfolio at this moment. The higher growth portfolio is a portfolio that's actually in my retirement account, and therefore I can't get to it because I'm not, I would suffer a penalty if I did. So I want to put that in higher dividend growth assets so that they would grow over time and be larger and ready for me when I do decide that I need them. I just wanted to go through the rationale behind the two portfolios, and I do add them together as my total dividend portfolio. The portfolio update, the balance this week is $761,852.95. That is a decline of $28,987.62 from the prior week. You can see that that is a 3.7% reduction for the week. We'll talk a little bit more about how that compares to the market here in a bit. But you can see that the yield portfolio, if I can say it this way, only went down 2.6%. The more growth-related dividend assets actually went down 4%. So when I look at year-to-date, the year-to-date portfolio, I've received $753.34 in dividends. I did not receive any dividends this week. I'll talk a little bit further about that. Also, the funding year-to-date is $7,800 that went into the yield portfolio. Nothing further in the growth portfolio. So you can see the market change then year-to-date for both portfolios combined is $3,841.23. Interestingly enough, the yield portfolio actually is still positive year-to-date by 2.1%. You can see the market change is a positive $3,615.25 there. Market change on the growth portfolio year-to-date, so that's the first 3 weeks of January, is down $7,456. So my net decline in my portfolio is $3,841.23 on a year-to-date basis, which is about 0.5%. So at the end of the day, it's gone up a lot and it's come down a lot, and at the end of the day, it's a 0.5% change. The S&P 500 for the week went down 5.7%. So if we look back at the slide I just showed, Our portfolio is down 3.7%. So we actually did better than the S&P 500, even though it did go down. This slide shows the market performance of the portfolio versus the market performance of the S&P 500. You can see here that in the first week of January, that'd be January 7th, the portfolio actually went up 2.4%, while the S&P went down 1.9%. The second week, we went up 0.9%, while the S&P was down 0.3%. And then this week, we went down 3.7%, while the S&P went down 5.7%. The yield portfolio, you can see I put in the market performance by month. You've seen this slide before, but this also updates for January through January 21st. This is by month, so you can see that the market performance is going to move. It's going to move higher, and it's going to move lower, and at the end of the day, it is just noise for a dividend growth investor. When I look at the growth portfolio, you see the same thing. It goes down, it goes up, it goes down, it goes up, it goes down. So it's just noise at the end of the day. When the market goes up, it means that stocks are more expensive. And when the market comes down, it means that stocks are less expensive. So as a dividend growth investor, a lot of times we like it when the market comes down, because that means that some of our stocks are on sale, and we love sales. Moving on then to the yield portfolio purchases, you'll see that I made no purchases this week in my yield portfolio. I didn't buy any new positions, I didn't increase my current positions, and I didn't sell anything. So the yield portfolio was pretty consistent from week to week. The dividends received, there were none received this week for the yield portfolio. And I wanted to share a little bit about how these dividends flow. If you look at the January expected dividends of $322 on that chart, you'll see that that's a lot lower than February and March, and it just is a function of when the companies pay dividends. I only have one stock in my portfolio that pays dividends on a monthly basis. The rest are quarterly. When I was first investing as a dividend growth investor, I wanted to try to balance that out. I wanted to try to select stocks that paid in January, and then I wanted to select stocks that paid in February and in March, and I wanted to balance that out so it would be consistent. I soon found out that that was not the best approach, because what I should be looking for are the companies that I want to invest in, and we'll let the dividends kind of fall where they may. So in January, we're not going to see a lot of dividend activity, but you'll see that pick up very heavily in both February and March. I do want to share with you something exciting, and that's that I entered into my second ever option. You'll recall, if you've seen some of my prior videos, you'll recall that I did an option on Hess Midstream about a month or two ago, and began looking at those again this week. Found that with my 100 shares of Campbell's Soup, there was a pretty attractive call option dated in March of this year. So I sold one contract, which is 100 shares of calls for Campbell's Soup. It's at $47. Some of the pertinent information is that I got $100 for that call minus 68 cents for some kind of fees. So at the end of the day, I got $99.32. I used my existing 100 shares of Campbell's Soup to cover the call. They have an average cost of $41.48. And the cool thing is, if they actually exercise at $47, that gives me about a $5.50 gain per share in those Campbell shares. Plus, I got the $99.32, which is almost 3 times the quarterly dividend that I get from Campbell's Soup. I get $37 per quarter from Campbell's Soup. So you put that together, I got almost 3/4 worth of the dividend. I would get $5.50 if they exercise, and if they don't exercise, I get to do it again. So I don't see any downside to that. It looks like a pretty good deal to me. We'll keep an eye on it here in the next few weeks and see how it does. And lastly, I have cash available in this portfolio of $522 to invest. And of that $522, $99 is from proceeds of this call. Next, we'll take a look at the activity in the growth portfolio. You can see I entered into a new position this week. I bought shares of Texas Instruments. So I did some research on Texas Instruments, and I liked what I saw, and I compared them to others in this space. I know a lot of people love Intel. I know a lot of people love Qualcomm. And I compared, there were about 6 companies in that space that I compared them to, and just felt that for my portfolio and for what I'm trying to accomplish, Texas Instruments made the most sense. I will probably do a video on that at some point, but I entered into a new position in Texas Instruments with 100 shares this week. Also, I bought 5 shares of Apple, and call me crazy, but I just got tired of only having 5 shares of Apple. What I did was I got them each a buddy. I bought 5 more shares of Apple, so now I have 10 shares. And that's still not a large position in my portfolio, but as the market went down, I thought I would take advantage of getting some Apple shares. So I got 5 shares of Apple. I got 20 shares of Microsoft, and that was on the heels of the announcement this week that they were acquiring or seeking to acquire Activision Blizzard. I just found that to be a tremendous decision for the board, and I was very confident in their ability to manage this company moving forward. So therefore, I bought 20 more shares of Microsoft, and it has become a bigger part of my portfolio. Lastly, I bought 30 shares of Whirlpool. That was from my last video, and I added those shares to the Whirlpool holdings that I have. I didn't sell anything from this portfolio in the last week, and I have cash still available to invest of $32,535. Let me talk about that for a second. I'm not in a big hurry to invest that cash. I am going to invest it, but it doesn't have to be today. It can be next week. It can be 2 weeks from now. I'm not in a big hurry. I'm looking for things that would be worthwhile to invest in with that $32,000. So I don't like to not be fully invested as a dividend growth investor because I'm missing out on the dividends. But I also want to find stocks that I am comfortable buying at the valuations that they are. And to be quite honest, the valuations have been really high lately. But I think as we see earnings come out, we'll see how well or how poorly the stocks do. And that'll give me an opportunity, I hope, to buy some quality stocks at discounted prices. Also in the growth portfolio, I did not receive any dividends this week. And very similar to the yield portfolio, you'll see January is low. However, February is even lower. And I get a lot of dividends in the 3rd month of each quarter. So you can see that in January, I will get $592 of dividends. In February, I'll get $405 of dividends. But in March, I should get somewhere in the neighborhood of $2,400 in dividends. So again, this portfolio is not designed to pay dividends evenly in every month. It's designed to invest in the companies that I believe are best suited for this portfolio. As dividend growth investors, we like it when the market goes up because it makes us really happy that our portfolio is bigger. But we really like it when the market comes down because it allows us to buy the stocks that we believe have tremendous value at cheaper prices. And that makes us very happy. So at the end of the day, think of, if you're kind of new to investing or new to dividend investing, think of this as noise. There's just a lot of noise in the background, and let's filter that out because we're looking for quality companies who pay a consistent dividend, who have large moats, and who will continually grow those dividends for years to come. Those are the stocks that we're after, and if we can get those cheaper, by golly, we should do it. So what are the next few weeks going to bring? I wish I could tell you. I'm not really sure. I just know that I'm invested in the market. My job is not to try to time the market. It's to try to buy quality stocks with the lowest possible price. And so that's what I'm going to do over the next few weeks with that $32,000 that I have to invest. And we'll see how that goes. So if we have some bad earnings reports, it could mean that the markets are down. If we have good earnings reports, it could mean that the market is really good. Or, the market could even run flat. The point is, who knows? And so since we don't know, we invest in the market in search of dividends so that we can seek out personal freedom, living on our passive income so that we can do what we want to do and live a fulfilling life. So with that, I'll see you on the next video.